Art is an alternative asset class that can add diversity and value to your portfolio. Here's how to get started with art investing. Welcome to the channel. If you're new here, I'm Sean, and at The Modest Wallet, we try to make money simple. So if that sounds interesting to you, you should definitely subscribe. It doesn't cost you anything, and it really helps out the channel.
Super helpful.
Today we're going to be talking about investing in art. Let's first talk about what art investing is. So investing in art involves browsing, selecting, and purchasing a masterpiece created by an artist. Art can be anything, but most often it is a painting or a JPEG file. In some cases, a replica could also be considered an investment. Now, the process of investing in art involves researching an artist, understanding their artwork, and valuing what is in front of the eye to determine if the investment could be worthwhile. Since the value of a piece of art is highly subjective, investing in art can be challenging, which is why it is most often done by a trained eye or with the assistance of a professional. This helps people avoid buying worthless pieces that may end up producing capital losses. So the process of investing in art starts by browsing the market to, identify potential opportunities that capture the eye, either due to their potential to appreciate in value in the future or because they appear to be temporarily undervalued. Then once an investor has, identified an opportunity, the artwork can be purchased either directly from the artist or through a dealer at auction house or at a gallery.
So you're gonna buy his art?
Investors can opt to buy originals, limited replicas, high quality prints, or reproductions. The best alternative for a particular investor depends on his or her budget, risk tolerance, and other similar factors. Then the investor must store the artwork safely or flip it by selling it to someone else, at a higher price. Even though this process seems simple at first glance, the complexity of this market should not be underestimated, as many variables play a role in shaping the valuation of masterpieces and even replicas.
This is a replica.
Investors can opt to incorporate artwork into a portfolio to increase diversification. Art is considered an alternative asset from this perspective of portfolio construction. A thoroughly conceived strategy could yield positive results in the long term, with estimates from a specialized unit from Citigroup pointing to a 7.5% annual return produced by art investing. Now that sounds great and all, but there are multiple factors to consider when investing in art, and let's take a look at a summary of some of them. Now first, there's liquidity. Art can be relatively illiquid compared to other asset classes, and that increases the odds of wider bid-ask spreads and hence the possibility of not finding suitable buyers if the investment has to be sold in a rush. Then there's the storage. Storing artwork can be costly, and those costs could weigh on the return produced by the investment in the long term. Next, there's the investment horizon. If the investor opts to adopt a buy and hold approach when investing in art, chances are that 5 years or more could pass before the art asset appreciates in value significantly to justify selling it. Therefore, art investing might not be suitable for people with a limited investment horizon or whose financial goal is to produce a steady stream of income. Then there's the regulatory matters. The laws that regulate art dealing and connected activities are not as strict as those that regulate the stock market or bond market. Therefore, investors are more exposed to potential losses resulting from fraudulent schemes. Now, when it comes to maintaining the integrity of a piece of art, here are some of the more important costs to consider. You should consider appraisals. Appraisal costs are something that must be considered by an investor prior to committing to buying a piece of art. You should also consider insurance. Insurance is a cost that should be considered to keep your art collection protected against theft, fire, flood, mold, etc. Then there's conservation. Investors can work directly with private conservation centers to keep the art collection in good shape. Conservation centers can maintain and repair the artwork if necessary. Then there's the installation. If you're planning on having your artwork displayed, consider the cost of installation. You will have to hire an expert to properly handle and install art pieces. Storage for artwork is something that must be considered in order to keep the object secured and in a proper temperature-controlled environment. Lastly, there's crating and shipping. Transporting art from place to place requires proper crating, shipping, and insurance. Now that we've touched ground on how to invest in art, the following is a thorough, step-by-step guide to help you make your first investment in this very interesting market. Step 1, do your research before investing in art. Art is a complex asset due to the subjective nature of its perceived value and other factors that cannot be easily quantified, in contrast to other financial assets such as bonds and equities. Now, with this in mind, investors who are not experts in this field should invest some time in understanding the variables that influence the valuation of art pieces, including the most basic things like the artist, the artwork, and the dealer. The artist is the mastermind behind the creation. His or her track record, background, expertise, and other similar factors will weigh on the valuation of the pieces produced. Therefore, researching the artist is the first step when trying to determine the fair value of a piece of art. On the other hand, the artwork is the second most important factor to research. Investors should focus on the techniques used to create the masterpiece for things like originals, the relative scarcity of the issue for copies, and the historical relevance of the piece, among the many, many other variables. Now, there are essentially 4 types of artwork. There's originals, where that means it's only one thing that's in existence. Prints, which are high quality replicas, and there's usually limited supply. Then there's something called Gickleys, I might be pronouncing that right, Gisleys, I don't even know, but I saw it, so I'm going to report about it. Those are museum quality prints, and they also come in limited supply. Last, there's the reproductions, which these are more lower quality prints. The dealer is also an important puzzle piece in the process of investing in art. Investors should make sure that they are dealing with a reputable institution or vendor with no prior records of fraudulent operations or any other similar misconduct. Additionally, the fees charged for helping both parties in setting the transaction should also be compared to the industry's average. Finally, the overall state of the art market is another factor to research, as investors should determine in which stage of the cycle the market is actually in. Investing during the late stage of a bull market could lead to severe short-term losses. Meanwhile, investing in the late stage of a bear market could produce sizable gains and reduce the required holding period. Now, companies like Art Market Research produce indexes that track the evolution of this market by compiling the results of auctions from 130 different sales rooms across the world. This index allows investors to keep track of how the market as a whole is performing and could help them in identifying the stage at which the art market is in. Step 2, determine your investment strategy. When investing in art, different strategies can be followed to generate capital gains or even some income out of this activity. The first approach is the good old buy and hold strategy, which consists of buying a piece of art whose potential to appreciate in value over time is elevated. This is mostly the case for art produced by up-and-coming artists or relatively scarce masterpieces that are constantly on demand. As time passes, the value of these pieces should appreciate and deliver nice gains to the holder. The second approach is art flipping. Same as with real estate, this strategy involves buying a potentially undervalued piece of art and then selling it for a profit to somebody else. It could also involve restoring or refreshing the artwork in case it had been damaged by the passage of time of the elements. Third approach involves investing in vehicles that provide diversified exposures to the art market. Companies such as Masterworks have perfected this method, as they allow investors to buy shares in a particular piece of art instead of buying the whole thing. Now, this allows investors to own a fraction of multiple art pieces and reduces the risk that a single underperforming investment may drag the entire portfolio down to the drain. Finally, investors can buy a piece of art to lease to its third parties, such as museums and galleries, to be displayed. Now, this generates a steady stream of income, although there are safety issues that must be considered if this is the approach that the investor opts to go with. Step 3, determine where to buy artwork. Now that you have established an investment strategy that will allow you to get started in artwork investing, you now have to decide where to buy your artwork investment. The good thing is that you have plenty of options these days. You have physical art. This is the most common way to invest in art and involves buying and holding a certain piece for some time or flipping it by selling it at a profit in a relatively short period. Physical art could be bought at different places, including auction houses, art fairs, galleries, or directly from a third party. For original artwork, the investor should secure a certificate of authenticity from an expert to validate that the piece is what it claims to be. There are also storage matters that must be satisfied to prevent the piece from deteriorating over time. Companies like Masterworks and Otis allow investors to buy a fraction of a piece of art instead of the whole thing to build diversified portfolios. This can be done online, and these companies take off the heavy burden of authenticating and validating the state of the artwork, among many other things. Now, there's also NFT marketplaces. Non-fungible tokens, otherwise known as NFTs, are relatively new in the art space. I do have a video all about them. I'll leave a link up above. Their popularity has increased as of late. The blockchain and cryptocurrencies have grown in popularity as well. NFTs can take the form of a picture, gaming equipment, or a piece of code. Anything in the digital world can be owned now, and ownership is established by minting the artwork on a decentralized distributed ledger for others to verify. Platforms like OpenSea, SuperRare, Foundations, Nifty Gateway, and Rarible have created marketplaces in which people can buy and sell NFTs very easily. Here are the top NFT marketplaces and how they compare. Now, step 4 is to buy your art investment. Investing in art is not cheap unless the investor adopts a strategy that consists of buying copies with the potential of appreciating in value over a long period or flipping them. Depending on which approach the investors pick, the entry budget could range from tens of thousands of dollars to millions. Investors should also consider storing costs as part of their investment budget if they go for physical art and adopt a buy and hold approach. Other costs include authentication, transaction, and auction fees. Overall, investing in art is a long game, as it typically takes several years for a piece of art from an up-and-coming artist to increase its market value. Step 5, sell your artwork when the time is right. Most investors have an exit strategy for art, as they prefer to take advantage of top cycle prices to dispose of their holdings instead of waiting for another cycle to take place, as the required holding period could extend significantly. With this in mind, investors must identify the right time to buy based on the market's conditions and the compounded annual return of their investment. As a rule of thumb, art is considered a risky asset class, possibly riskier than equities and real estate. Now, in turn, the annual return after fees of most investments should exceed the 7 to 10% threshold to be considered positive, considering the risk assumed. Now that you know the deal, let's look at some benefits of investing in art. First, it adds an extra layer of diversification to a traditional portfolio. It can generate above market returns. Risk can be managed by properly selecting the best and most liquid artwork, and there are multiple vehicles available through which investors can build diversified art portfolios. There's gotta be some downfalls, so let's take a look at those as well. The minimum investment required can be high. The risk of fraud is elevated unless the investor takes appropriate measures to reduce it. Investing in physical art without professional expertise or advice can lead to severe losses, and art investing is not liquid. Investing in art can be tricky, but it can also be quite rewarding if the investor chooses the right approach. Financial innovation and technology have revolutionized how investors can get exposure to this asset class, and this has made art investing more appealing to beginners. That said, art investing remains a risky activity, and investors should proceed with caution and make sure that they understand the ups and downs of this endeavor so they maintain a realistic expectation while limiting their losses. Overall, art investing is a long game that requires patience, a trained eye in some cases, and a decent understanding of how these new investment vehicles function to make the most out of them. I recently posted a video about another alternative asset class, wine investing, so if you get a chance, check that video out as well. I'll leave a link above. Now, I hope you found value in this video. If you're interested in any of the sites I mentioned involved with art investing, I'll leave a link in the description for you to check that out. As I said at the beginning of the video, it would mean a ton if you'd smash that like button and obviously subscribe to stay up to date on any new videos we release. If you have any thoughts or questions, feel free to drop us a comment below. That's all I have for you. As always, I will see you in the next video.